Hi, welcome to the market alert for Thursday, the 15th of February 2024. So traders fall back in love with stocks and bonds after terrible Tuesday. Bitcoin breaks above 50,000. After breaking hearts yesterday, that was Tuesday, traders bought the effing dip in their most loved stocks today. Well, what did I say in yesterday's alert? Classic shakeout, use the news, bring the market back. US stocks and bonds pair post CPI extremes after the Fed downplayed the impact of one report. Of course they did. And economic news today, we got GDP for the UK at 7 a.m. Let's just have a quick scan through the low impact. Don't see anything there. Lagarde speaking at 8 if you trade the DAX. And then what else have we got? There's a lot of news today, even if it's low impact European news. And 1:30 US, we got the retail numbers out and Philly Fed manufacturing. And FOMC Wallet is speaking at 6:15 when the markets will be closed. The US, of course, will still be open. So it'll be interesting to see if the markets rally on whatever he says during the evening. Industrial production as well for the US. After lunch there at 2:15, 15 minutes before the Dow opens. Speaking of the Dow, let's have a look and see where it traded yesterday and how it made a miraculous return to the upside. So yesterday, as I mentioned in the alert, the market moving back throughout the day. There was no major look at the previous day's low. We saw the electronic market moving up. There was some selling in the cash market to begin with, but they brought the market back above the close, and then the market spent the whole of the evening moving back to the upside. We're very close to yesterday's high. If we go back to the daily chart, you can see that we're free to move through the 50% retracement, but at this level we do have the 5-bar moving average that could give the market a bit of grief. But as I said, this is classic shakeout, bring the market back. Before you know it, we'll be back to trading all-time highs, and the CPI numbers will be forgotten. So let's have a look at the DAX's reaction to this yesterday. So yesterday's DAX moving back to the upside. It looks like we're about 89% from the recent high to the recent low. Yeah, we're in 78% at the moment, just heading towards the 89. Keep an eye on the 17,064. Which is obviously the target of this market to break through. Again, there is no geopolitical news affecting the markets. Doesn't matter how many wars. There's no talk of any recessions or the debt or nothing. So, no surprise that the markets are making their way back to the upside. You see this yesterday, all green all the way as the market moved up. Bit of a blip around the Dow and just before the Dow, but notice how they came back in and brought the market. And then the market continuing higher throughout the evening session on the electronic platform. Yesterday's high is already in the crosshairs, and if we go down to, let's say, a 5-minute chart, you can already see where the market has actually traded to yesterday's high, pulled back, and now is trying to stay above the close and make its way to the upside. There may be a bit of a sell-off to begin with this morning, as a lot of people may want to get out of the trouser a few profits and come out of a few stocks as well, as the market was moved back to the upside during yesterday. In the S&P, big recovery yesterday as the market headed back to the upside. Again, we can draw in some fibs on the upside there. We have some targets there before we get back to the all-time high, which is 5,048.6. You can see the buying coming back in yesterday there as well. Again, you could expect a bit of weakness at the European Open, just as you get it with the cash open of the US markets, which I've mentioned several times now. It seems to be the thing. Bring the market up with the derivatives, sell off the cash positions, clear the selling out of the way, then bring the market back to the upside. And that's what we saw yesterday. So we've already had a look at yesterday's high. The market obviously wanting to get through this during the electronic session if it can. In the FT100, straight reversal here as well with volume, market oversold, and now attempting to try and move back to the upside. Fib retracement and targets already written in there, and you can see at 62% the market has a bit of resistance there because there's some selling with the pink line and also the fib retracement. In the 30-minute chart, it was straight up, and the reason the market went up was due to the inflation numbers. So let's just have a quick look at those. So yesterday we see a forecast wrong on inflation as it stays at 4%. So again, the economists can't seem to get anything right. But yeah, it's up at 4%. But this was appears to be a bit of a positive for the market, probably relief after Tuesday's US CPI numbers. Market sideways overnight, above the close or sitting at the close at the moment. It needs to throw in a few more buyers before the market gets back up to the high of yesterday. US dollar has been down. Well, it was up again yesterday, down yesterday, up on Tuesday on the prospect that the CPI is or inflation starting to move back to the upside. And yesterday, tiny bar and a bit of support coming in there. So I suspect we've got support in the metals market. So let's have a look at those. And starting off with silver, the market bouncing off the 89% retracement for the move from here to here, which we looked at yesterday. I'll just draw it in for you so you can see it. It's just there, back down to 89. In fact, we've probably double bottomed here. So let me just check this. Let me just grab the low of this bar and see what the numbers are. It looks like, 19, isn't it? So 21.91, and this one is just slightly lower, if I'm not mistaken. Yeah, 86. So about 5 cents, 10 cents lower. So moving up yesterday, surprised, but there's plenty of time to slam the price back to the downside. 30-minute chart sideways, and unlike the LBMA, the market, they tried to slam it, as you can see with the selling there, but obviously somebody was buying at the close yesterday because it didn't go down with all the selling volume, and then the market moving to the upside. In Asia, the market's taken out yesterday's high, but it's stuck at the 200 MA in the 30-minute chart. Meanwhile, in gold, again, you can see the buying coming in there. All it was a shakeout so that the central banks can buy more cheaper gold, and now we're finding a bit of stability coming in there as well. Bit choppy yesterday for gold, unlike silver that's made its move and taken out yesterday's high. Gold hasn't, so that means that the gold-silver ratio will be moving back to the downside. And in the gold-silver ratio, down in yesterday's session and down overnight, as I say, if the silver's up in Asia but gold isn't, so that's putting downside pressure on here. But again, I still think there's a very good chance of taking out the 92 level and moving to the upside, particularly if the regional banks start to come more to the surface and we start to see like Silicon Valley news, what we had this time last year before the Fed bailed the depositors out. So let's have a look at the markets for yesterday. So kicking off, this was the inflation news. Market up to the DP, and then the reaction sees the market drifting in a sideways move. We get the cash market opening, market moves up. Matter of taking profits when that first happens in the morning, and then we get a bit more of a move to the upside. There wasn't too many more points, but the market again moving just above the scalp there by about 10 points. Very difficult to hang around in a trade like that when you've got a sort of inflation news, because the market can be brought up and then sold off, where we have a potential sell signal there. Market moving lower, and then just as it comes back, taking the profits off the table again. So only 2 scalp trades there. And then the market into a sideways move, as you can see there for the morning. A bit more movement as the Dow comes on stream at 11 a.m. You can see the up move there. So you've got the electronic Dow, and then it'll have a breather, and then we will see the market move again to the downside before the Dow opens, and then sideways to lower. No trades in the afternoon. They bring the market back with the Dow after the Dow had its shakeout, and that was more or less it. But you can see how tiny the bars are, apart from that one, obviously, that came as a shakeout. So obviously some news in the US that moved the market down. But it's an hour after the cut-off period of 4 p.m. there. But nice bit of movement there. Better than the afternoon session when you actually look back and see how quiet it was for the last 10 minutes, 20 minutes or so. So there we go. Let's have a quick look at the overnight 2 minutes, see where prices are. And currently, again, we've just had another run up to the high. No surprise there, is there? They'll do anything to keep the market moving to the upside. And I just find it very difficult to see how this market is actually going to come down, because it is highly manipulated. It's in the best interests of those that are manipulating it to keep moving it to the upside. It's all disconnected from reality. That's patently obvious for anybody with half a brain cell can see this. So it's just a matter of, as it said in the headline to begin with this morning, if we just go back and look at it, and excuse the language, but after breaking hearts, traders bought the effing dip, because that's what they've been doing since 2008 on all pullbacks, whether it's COVID related or any other issue, regional banks going bust or whatever. Bring the market down and then bring the market back to the upside, and that includes also dispatching Liz Truss as well. Crash the markets and crash the pound, then you get the leader in that you wanted, and we now have an unelected leader. But anyway, that's another story. So there we go. Just the market traders just keep buying the dip. And there's a pattern, of course. Bring the market up in the pre-market, get rid of the cash positions, and then bring the market back up once all of the cash deals are done, or the sells are taken care of. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.